Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:59 a.m. Central Time, and I'm recording this in preparation for the market day of June the 4th, 2015. Full disclaimers at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's dive in and see what's happened in our overnight activity. So, we've had weakness on all four broad market indices. The S&P's down over 0.5%, the Russell down about 0.6%, NASDAQ down the most at 0.8%, and then the Dow down about 0.5%. You have crude oil at scratch, and then the euro up about 0.9%, and then bonds slightly below scratch, and gold much the same. In overseas action, China put in a good night so far, up about 0.76%, Hong Kong down about 0.4%, Japan scratch. Europe not doing so well. Europe is down, with Germany about 1.5%, United Kingdom almost as much. In terms of our macroeconomic reports for today, we have with the U.S. the regular weekly unemployment claims, and let's see here if there's anything else of note. Natural gas storage. You do have an FOMC member speaking today. More importantly, tomorrow you got the big one, the monthly unemployment report. That is one of the big four reports, so be on the lookout for that. Tomorrow we'll probably have a quiet overnight coming into this report unless something really significant comes out in overseas markets. FOMC member Dudley also speaks. So a couple big things on tomorrow's slate. If you're a crude oil trader, be aware there's OPEC meetings. So anything that comes out of the OPEC meetings could really push crude oil around. In terms of the current volatility conditions, obviously we remain quite low. Short-term VIX 12.70. IV percentiles 22, 9, 23, 33, all in that bottom third. Only one market put in a standard deviation move yesterday, the Russell, and actually the Russell was really significantly strong yesterday, especially in contrast to the other markets. In fact, let's go ahead and take a look at that. You see the S&P here, and not the best day. I mean, obviously we had a bit of a run, but that all faded during the course of the day. So the SPX was just not super impressive. You had this initial open activity, but then it totally tailed off, and you ended up with a close that was just marginally above the open. So not super insightful activity by the institutions there that help us really determine where is this market going to go. We just seem to be chattering in this range, and indeed if you look at it, the last 3 days, lots of tails, but ultimately closes that aren't that far departed from their open. So while we had big activity here the first day back from the holiday, then big reversal, and then of course we had this down day, but really it's just getting quieter and quieter. Some people might even look at this as something of a coiling pattern, though obviously lots of wick activity here, and is something setting up. Well, when you look at the VIX, it's hard to get much out of this. There's just not much to get excited about. From bonds put in a massive day, and put that in context. I mean, look at the drop we've had in just a few weeks. From 138.5, we're now down at 117.5 as a percentage. That is a massive move. At the same time, the broad market has not made a massive move. Even within the last 4 days, look at this. We had the swing up, and we got as high as 123 and about a half. And we've come all the way down from that in 4 days with big overnight gaps in the bond market, and have marched down to break the low yesterday. I mean, we gapped down, but the gap was still above that break, and it broke during the day yesterday. So bonds continue to have substantial weakness, but yet that's not seen really all that much in the broad market. So often we see a correlation, and that correlation just seems to be meaningless of late. You did have the big day by the Russell. When you look at this, I mean, clearly moving up above its recent range. Still has yet to make a new high like the S&P did, and but it certainly closed some of that move. In terms of the NASDAQ, this is a weaker day and still within the range. And then the Dow Jones. Another thing that we've been paying a lot of attention to is transportation. And, you know, on a day when the Russell was doing well, transportation was also on fire. And yet, at the same time, you know, the Dow, which we would expect this to, you know, kind of have some correlation, that didn't follow through on the Dow. So, oop, that's the enough on that. I've spent enough time on this. The let's get over here to our regular daily report. Not a lot of changes here today, to be fair. Phase 3, higher highs, higher lows, is still the longer-term posture. IBD status still in confirmed uptrend. GMI index at a 6 out of 6. We have in our market posture, it's technically signals bearish. I am kind of calling this neutral. If you look at, we've been flip-flopping back and forth in recent days. It technically has rolled over as bearish, and that would call for no new short-term or intermediate-term bullish trades. You also have bearish on the Dow, but then on the NASDAQ, very bullish, and the Russell bullish. So this is very, very mixed. And given the flip-flopping back and forth on the S&P in recent days, I think it's best to really call this neutral. And indeed, I just conducted my regular monthly review of the business cycle and the intermarket relationships and so forth. And neutral is really the word of the day. When you take a look at all the intermarket ratios and you know what that tells you about late cycle, early cycle, mid cycle of the business cycle, it is just abnormally neutral in the stances. There are very, very few clear indicator signs coming from that review that tells us that this market is, you know, in a all bull mode or anything like that. It is extremely neutral, and you know that's part of what shapes this threshold risk level 0+, normal with cautionary aspects. This market is certainly not a healthy bull market. We do have a couple volatility-based warnings still present. Market in decline and sharp increase warning are still present. We still have that VIX daily squeeze. We still have 3 out of the 5 intermarket risk aversion indicators that have flagged as risk off. Our regular opinions have not changed. Option income strategy, VIX is inside the acceptable window. Consider the potential for increased volatility is the name of the game right now. Covered call strategies, you can still be cautiously bullish, calling for a 3-to-2 distribution between in the money and out of the money strikes. And then on put selling, conditions are still acceptable for new core put portfolio positions. I did put on I think 3 yesterday myself, but at the same time, you know, they were in stocks that absolutely I was willing to own in the position size in which I put it on. So if this market does break down, guess what? I'm not going to be a bit surprised, and I'm going to have positions on that are willing to go along for the ride of that breakdown, because I just feel that that breakdown is very possible. And I'm not calling for a major bear market recessionary breakdown or anything like that, but what I am thinking is that this market is absolutely primed for a pullback, and a pullback is usually defined as something 5 to 10%, and that we could get something in that range very, very easily, very quickly, if things start to break down. When you start to look at our sector market posture, Christmas tree lights again. Obviously some things are doing okay, but these are also so neutral in terms of when you actually look at the indicator and these flat lines, they just flip-flopping back and forth, back and forth. And then of course on the sector percent change, it was a better day put in by a number of the sectors, but there's just not a lot of consistency. You see here 1 day green, 5-day red, 1 month 50-50, 3 month 50-50. There's a lot of chop going back and forth, and we continue to see that inconsistency. Well, I think that's probably enough for today. As always, if you find that what you're getting here is supportive to your trading, we greatly appreciate you investing in us by liking us on YouTube and then sharing what you have found with your trader community. If you've got suggestions or other feedback, send us an email at support@falconglobaltraders.com. More information is available at this website about the activities of how we apply these kind of techniques into our trading. Performance matters, we get that, and we're quite transparent. And disclaimers, as always, hit the pause button if you need more time to review the disclaimer statement. And we look forward to seeing you back here before the market open tomorrow morning.